Good morning. Welcome to Daily Rates Live with the Mortgage Calculator. We will start here in just a minute. Today, we're going to go through some live mortgage rates and then we're going to do a deep dive into mixed use properties. So, we'll get started here in just a moment. Feel free to drop a comment there in the chat as you tune in. We got the chat there up on the screen for now. We appreciate everybody tuning in nice and early. We'll get started here in just a moment. Hope everybody had a great weekend and is ready to get back into it here today. All right, looks like we're live on all the different platforms, so we'll go ahead and get started. Keep dropping comments there in the chat as you tune in, and feel free to drop any questions in the chat as well. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender specializing in non-QM loans, and what we do every morning on the show at 11 a.m. Eastern is go through some live mortgage rates, and then we do a deep dive into a different loan topic. Today's topic is going to be mixed use property. So because we specialize in non-QM loans and loans for investors as well, mixed use property is definitely something that we're very familiar with here at the Mortgage Calculator that we offer our clients that a lot of people do not. So Jose will do a deep dive into that here for us shortly. But before we do that, we'll do what we do every morning, which is pull up our live rates. So Nick, if you're ready, let's go ahead and pull up the pricing tool and let's see what the rates are looking
All right. So pull up the big page here of all the rates again. So what we're going to look at is all of our standard rates using a standard scenario. And today is May 6th, just after 11 a.m. Eastern. So all of our standard rates are live here. Going to set up a scenario to compare across all the programs with a 400,000 loan amount, 500,000 purchase price. So that's 80% loan to value, 20% down payment. And 760 credit score is what we will use for all the demos, and a 40% debt to income ratio for all of our loans with DTI. And then our DSCR loans will use a ratio of 1.5. So I always have to say that before I pull this tool up. If you'd like a full breakdown, an itemized loan estimate of all the fees that go into the APR, please get with our team members. We have 300 loan officers to help you out. Let me go ahead and share the screen here. So this is our page. Anybody can see on our site. Just click on today's rates and you'll be able to see this. But today's rates for first up are 30-year fixed conventional primary, typically the first option for most borrowers looking for a standard primary home. Rates today come in as low as 6.75, but make sure you cue in on the APR here, 7.095, as that's what we use to compare across the programs. Now, if for any reason our customer does not qualify for a standard conventional loan, typically the next option we want to compare is an FHA option. So FHA comes in today, rates as low as 5.875, and the final APR at 6.853. So if our customer qualifies for both, actually, FHA might be a touch cheaper, but this does include the upfront and yearly mortgage insurance that is required for FHA, so a great option for our borrowers that need to use it. FHA does allow more leniency on credit issues and events, as well as a much higher debt to income ratio. Now, if our customer happens to be eligible for a VA loan, that's only for eligible veterans and active service members. If they have that eligibility, great. We have some amazing VA programs. So this typical scenario here, 30-year fixed VA loan, rates as low as 6.124 today, and the final APR comes in at 6.427. So for our vets out there, obviously, they always get some of the best programs. So you see it's the lowest APR on our list here. So if our veterans are eligible, that's definitely the best program. And next up on our list is our USDA option. So again, USDA is only eligible for properties that are in a USDA eligible area. Typically that means, let me bring Jose back in here. Typically that means a rural property. So make sure you check the USDA map there. If your property is eligible, this is a good option as well. There's some benefits for the USDA program. Rates come in as low as 6%. And the APR 6.758. So notice if your property is eligible for USDA, you probably want to take USDA. And if you're eligible for VA, obviously VA is going to give the best benefit. Now we'll go into our non-standard, also known as non-QM here. So our first option up is if our customer doesn't qualify for any of the standard government or agency programs that you see here that are typical, we have our non-QM alt doc for primary homes. Typically this means bank statements, but could also be 1099s, B&L, all kinds of different options that we have. The lowest rates today for an alt doc loan that we have today, 7.125 rate, final APR of 7.474. So to use a totally different income method for a customer that doesn't qualify for conventional, typically compare across this way, it's actually within half a point of conventional. So 7.095 for conventional, but if they don't qualify, need to use bank statements, very reasonable here, 7.474. So not much more cost for our customers that need to use this program. And for our investors, so these 5 are our final primary examples here. For our investors, let's do the next couple. So 30-year fixed non-QM alt-doc investment. Typically, this is bank statement or similar. Rates come in as low as 7.5 and a final APR of 7.86. So for those that need to use alternative income for an investment property, this is an amazing option. And now we want to compare that to our other options here. So the standard conventional option, remember FHA, VA, USDA do not work for investments. So we'll look at our 30-year fixed conventional for an investment property. The rates come in at 7.5 for the lowest option, final APR of 7.855. So almost identical to the bank statement option, pretty amazing. But always recommend our investors check out our favorite options, our DSCR options. So the next on the list, our 30-year fixed DSCR option with a 3-year prepayment penalty. This doesn't require any income or employment from our borrower. We simply use the estimated rents from the property to determine a DSCR ratio. And as I mentioned, the ratio we use for this demo is 1.5. So this property is cash flowing on a monthly basis. So with a 3-year prepayment penalty, which is pretty standard, our rates come in as low as 7.125 with a final APR of 7.471. Notice that is beating conventional by quite a bit today. And to sweeten the deal, we even have options to do a 5-year prepayment penalty to lower the rates even further. So if we add a 5-year prepayment penalty, we can get rates as low as 6.875, final APR of 7.201, absolutely blowing conventional out of the water, which is pretty amazing. And the final option here, we do have an option with no prepayment penalty. It is a little more expensive. So the DSCR with no prepayment penalty for investors that don't want to have a prepay, no problem. Rates a little bit higher, 7.75, final APR of 8.102. So this is a little bit higher than conventional, but definitely a much more preferred loan for most investors. Although I do recommend our investors check out the 3-year, 5-year, and other prepayment penalty options, as it definitely lowers the price, as you can see. And our final couple options we want to go over are second mortgages. So 30-year fixed second mortgage for a primary. So these are very popular as most people don't want to touch their first mortgage. Most first mortgages are typically at a lower rate than we can offer today. No problem if you need cash out. A HELOC is a good option, but these 30-year fixed second mortgages are even better typically for rates and terms. So amazing option here, rates as low as 8.75 for a second mortgage, cash out, 30-year fixed rate, and final APR of 9.16. And we even have those same options, 30-year fixed second mortgage for investment properties. And these even use bank statements and other alt docs as well. Rates as low as 9.875 and final APR of 10.216 for our investors out there. So tons of great options. Please check out this page. Anytime you want to check out our rates, just click on today's rates at the top of the page and you can see all of our general options here. But now let me switch my screen. I'll get into our topic for today, which is going to be on mixed use properties. So this standard scenario we always pull up is a standard 1-unit property, just a standard single family home, nothing fancy here on our demos. But today, Jose is going to go into the options where we can use programs like our DSCR, our favorite program, for very unique properties, such as our mixed use properties. So a mixed use property has a commercial component, which would typically classify it as commercial overall. However, with our hybrid programs here, we can apply our same DSCR principles that we can to a single family regular rental home to a mixed use property with a little bit of caveats there. So Jose, go ahead and explain a little bit more how we can use this program and exactly what types of properties up to how many units. And then let's check out the actual rates.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Yes, to expand a little bit on what Nick was talking about, our hybrid type program, that's the key component here. There are mixed use property options in the commercial realm, but the main thing to note that these loan options will immediately disqualify your property regardless of the amazing debt service coverage ratio it may have, your incredible credit score. All the other property attributes will be totally trumped by the fact if the property is in a low population density area. That's the key. They're going to ask you for the address with the zip code. They're going to access their tables, and they're going to see what the population density is. And if it's below their threshold, they're simply going to tell you, we're sorry, we can't do the loan. That's how it is in the commercial world. Well, here with our option, we don't do that. What we look at is simply, is the property rural? And that is going to be based on the appraisal report. Appraiser does their review, their inspection, and they're going to vet the property like any other property, look at the distance from services, schools, convenience, all those other factors, and either state if it's rural or not. If it's rural, the property is disqualified. If it's not rural, then we're going to review all of the attributes of the property and qualify it according to the guidelines. So that is a very big issue. That, and obviously the rates that you're going to see that we can offer on this option is considerably lower than what you're going to be able to get in the commercial world. Now, the main thing, this program is for 2 to 8 units. And then depending on the number of units would depend on the number of commercial components, right? So 3 units, I think maximum of 1, 4 units maximum of 2, stuff like that. Square footage also has to be at least 50.01% residential square footage in nature. Anything less than that will not qualify for this program. So let's go ahead and share the options I have for you today. Now, this is a maximum 75% loan to value, always max on this. And I am running these scenarios with a 5-year prepay because this loan option does require a 5-year prepayment penalty. So this is at our top tier credit, 760 and above. So you're looking here, 10.749. We actually have a little bit of a lender credit. Let me click on that one so you can see exactly how much it is. I have a 0.18 lender credit, and you can buy this all the way down to 8.999, which is our lowest rate option. And this is at our top credit tier. So now we go down to 720 to 739 credit, still only 25% down. Rate does go up a little bit. We are now 10.749, no longer has a lender credit, has a little bit of a cost, and you can buy that down all the way to 9.124. So it looks like a 0.126 increase in the rate. 700 to 719 is our next credit tier. Now, I will state on a purchase for this product option, 700 is the lowest score that can still offer a 25% down option. So here with our 700 to 719 credit, our rate does increase a little bit. We are at 10.999 with a cost of 0.775 points, and we can buy that down to 9.749 at a cost of 3.275 points for our 700 to 719 credit. Now, below 700, now at a 680 to 699 credit score, it's 30% down. And our lowest cost option is 10.999 at a cost of 0.4 points. And you can buy that down to 9.499 at a cost of 3.4 points. And again, this is 30% down, 70% LTV, 680 to 699 credit. Now, for this particular option, our lowest credit score is 660. So here we are at 660 to 679. 35% down now is the minimum down payment for this option at a 65% LTV. We're looking at 10.749 is our lowest cost option, almost at par. And you can buy that down to 9.124%. So let's give you a couple of cash out refi options. Now, for this particular option, the maximum LTV is 70%. At a 760 score or above. Now, we don't have, it's 720 is the lowest credit score to still get 70%. Just wanted to clarify that. So here at a 760, our lowest cost option, 10.499 at a cost of 0.15. And our lowest rate option, 8.874%. And last but not least, our last option here is 65% LTV with a 700 to 719. I did state 70% was the maximum LTV, 720 or above. And here, our lowest cost option, 10.499, and our lowest rate option, 8.874. So I do want to state we do have other mixed use options. We actually have one that goes down to a 650 credit score, and we'll do 70% on the mixed use, 75% on the purchase, 70% on the refi for at the 650 score for the mixed use property. But that one is the option that does require the zip code, and the rates are much higher. You'd be looking somewhere around 11.619 at a cost of about 2 points for that higher, lower FICO score option.
All right. Okay, let's see here.
Couple questions about mixed use. Jose, can you run over what mixed use is real quick again? It's only investment properties, and exactly the breakdown again. Just run that over one more time for everybody.
Right. You would need at least 50.01% of the property to be residential in nature. As far as the commercial component, it has to be clean type business, right? They'll accept professional office. They'll accept retail. Some options are now accepting restaurants, right? They weren't for a while, but you can't have anything like manufacturing. You can't have any type of illegal business. Some retail type businesses may not be considered as well. I'm not sure. For a while, they may have had some kind of a restriction on like smoke shops or something like that. So, or cannabis dispensary. So you would really want to reach out to the source and see if any of the businesses that you're thinking or that are in there would be an allowable business. But
this is only for investors, right?
Yeah.
Obviously, it's not for, you can't live there, but you also can't own the business or be involved in the businesses that are renting there, right? These are investment properties. You're not involved in living or any family members living in the top, and you're not involved in any way with the businesses. Even family member businesses would probably violate that as well on the bottom, right? This is pure investment, right?
Correct. Can't have any family, friends, or anything like that. Anybody that could be construed that they're not going to be paying rent.
All right. I don't see any other questions. Let's go ahead and wrap it up. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different loan topic. So I'll have a new topic for you tomorrow. We appreciate everybody tuning in. Thank you, and we'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.